Hello, hello, hello. Okay, just waiting to check that we are definitely live. So I'll just give it a minute before I say anything meaningful because I've done this many times where I start and then discover that I'm not live, so I'm just talking to no one. Let's switch camera here, full screen for the first 30 seconds. Looks like we are live. Fantastic. Let me check for audio. Hello, hello, hello. Okay. Whoa, that is exciting. Okay. So, as we all know, let me switch out of this live system for the minute. And I haven't put these two bits of data in yet, but I believe that the earnings per share for this year were 0.66 or something like that. So we'll get the PE ratios put in here and stuff like that. But the headline is that Tesla have missed earnings this year. And I don't think anyone should be particularly like, this isn't, I think all the headlines tomorrow are going to be really dramatic and they'll be like shareholders lost, or like, it's always trying to make it look like someone's wrong, someone's right. But we live in a very complicated world. And I find it funny. I see people doing spreadsheets and spreadsheets filled, chock-a-block with numbers. But you got to think about Elon Musk on the factory floor looking at metal coming in and batteries and all being assembled by engineers and these brilliant brains. And I think it's a miracle that anything ever gets made, to be honest, with the amount of government regulations and things that can go wrong. Like I've worked at a phone case factory and I've seen the things that can go wrong there. And I think about the scale that they have. The idea that you can try and quantify this world is insane. Honestly, like it just really is absolutely ridiculous. So the fact that people come so close to predicting the earnings of these companies, I think, is absolutely remarkable. And this time they were slightly off. And I also don't think that the fact that we are in a rising interest rate environment gets enough credit. It does get mentioned plenty times. Don't get me wrong, like it does actually get some sort of credit these days. But after all, that is where we're at. And I wasn't lying about a beer. So hopefully that you guys brought yours as well. I know there's already a ton of serious YouTube channels covering all the data on this stock. And look, I am going to get into basic top line fundamental analysis. But if you want, there's Tesla Shares Daily. He goes through every single line of possible information you can think of. And so he's great. But I watched his channel and just in preparation for this video, I was watching him go through the earnings release, and basically because he goes so deep into the analysis, all he ends up doing is repeating verbatim what is in Tesla's 2023 Q3 report. And you might as well just read the report. But I do like him, don't get me wrong, nothing wrong with the guy, and there's definitely a market for that, but that's not what I want to be. So yeah, please, by the way, any questions, leave them in the live stream section and I'll try and answer them. Yeah, the 0.5% boost aftermarket, I just saw that, or something like that, 5 basis points or whatever. Not that I give much attention to price. Honestly, I don't generally pay attention to price after I've purchased something. After I purchase something, I just try and pay attention to their earnings and whether they were within my parameters, whether I'm happy with that. But basically, I think the fact that the price has gone up slightly aftermarket just suggests that, from what I saw, that they're 5% down today alone, which it just kind of suggests that people predicted that this was going to be a negative result in this earnings, predicted correctly. We all knew this already going into it because Elon Musk had already said that he was lowering the price of his vehicles. So we already had that information. That the only reason you do that is if you're having slow sell through. And I don't know how Tesla would not have slow sell through during a time of rising interest rates. So it's all kind of exactly what you'd expect it to be. One thing I think it does kind of suggest is goes against the sort of people that are super loyalist to Tesla, is that Tesla are just any other company. they have done a miracle to get where they are, and the fact that they are profitable now is quite incredible. It is genuinely a real credit to Elon Musk. 1 in a million companies do what Tesla have done. But that said, they have diluted shares plenty of times now, which is what they should have done a long time ago. And so it does sort of suggest that these people that are holding Tesla till the victory day, they're not going to get this sort of super ultra glory stock that they potentially thought they were. Like it is vulnerable to rising interest rates. People aren't going to buy more cars despite having less cash. And so this is why I'm personally not a Tesla shareholder, just because I believe the company has always been overpriced. That does not mean, but I've never shorted it or anything like that. I never considered anything like that because I want to see them succeed. And I really like the Tesla company, and I really respect the people that were holding a long time ago and saw what Tesla would become. And I think that the self-driving vehicle thing is a really exciting concept. However, that is yet to be seen. And I went through the 2023 quarterly presentation, and all I did was I searched, I did Control F and self-driving. I took it out of the thumbnail because basically it shows up once, full self-driving and other vehicles, and it shows up in the forward-looking statements on page 25. It's, tiny text. So again, for all the people saying, oh, Tesla, by the way, if Tesla do full self-driving, it will be remarkable for the earnings. Margins on that will be far better than any car company, and it will fully justify a high price to earning ratio for Tesla going forward the coming decades. But you've got to actually release the product before we can value it. And so I can't include some sort of metric for full self-driving in my valuation of the business. And some people, their strategy is purely sort of idealistic and seeing what a company is trying to produce, and that's actually quite a valid way of being an investor. I'm not really against that at all. It's just it's not really how I function, and so that's the thing. Full self-driving, again, no solid idea. It's a bit like the Cybertruck, where everyone got really excited about that, and people were like, oh, it's Tesla doing this incredible Cybertruck, so we should all get really excited about it. And then it took all this time to actually deliver the Cybertruck, and now obviously it's going to take time to get all the units that they promised out to consumers. Just like any other company, they're experiencing the same issues that all companies go through, and it's the reason that we have this benchmark, this understanding of how fast a company can grow. Anyway, so maybe I've talked a bit too much about that. Let's go to the first page of their financials, and I'm just waiting for them to go live. Let's have a little look. The press release is here. Oh, and yeah, so we've got Q3 press release. I've downloaded the shareholders deck, so maybe this hasn't refreshed properly. There we go. Can we listen along? We have countdown timer, 25 minutes to talk about their quarterly earnings. Okay, so let's just go through this document, but I'm not going to go through it line by line, inch by inch. Tom Nash did a good video earlier today, a couple of hours ago, to really sort of put perspective on what we can expect from this. It's where I got the information about the fact that the price of the cars has been going up. Obviously, I don't follow stocks that I don't hold that closely, but I do follow Tesla at a glance, and I did some more research before this video, just because the company is fucking cool, and everything that Elon Musk tends to work on business-wise, I find fascinating. I don't really have any opinions on the man himself. So let's just check. Oh, sorry. Okay, so what we've got here, as you can see, 2022 Q3 revenues were 21.4 billion, and now 23. So now they have gone up 9%. but the gross profit has gone down. That's the message. That's because cars were selling slower, and so they should have had higher production costs, but from what I could tell, their capital expenditure went down. So what we got here is it was 1.8 billion. Oh no, that's gone up as well. So capital expenditure has gone up. What I was looking at down here was cost of goods sold per vehicle has gone down. And so artificial intelligence software and hardware, this is just them talking about they are building up to having fully self-driving vehicles, and they purchased some expensive equipment. Doesn't mention where they purchased it from. Be interesting if you could let me know in the comment section. Did they buy it from Nvidia, or did they buy it from one of the other companies? I'd like to understand, because I personally believe that Nvidia is a bit overpriced, but it'd be interesting if another client like Tesla is shopping there, and I'd like to understand why Nvidia has such a reputation. Anyway, vehicles and other software. All Tesla rentals through Hertz in the US and Canada now allow Tesla app access, allowing renters to use keyless lock/unlock via phone key, remotely precondition the cabin, track charge status, and more. I don't like the idea of a phone key. I don't like the idea of another app to access the car, but I don't mind these ideas so long as they're done well, so long as the execution is really, really good. One of my frustrations is Tesla does something like this, and they'll probably do it well, and then someone like Volkswagen goes, oh, we got to do this also. I don't know why they feel the need to do this. I don't know why they feel the need to copy it, but then they copy it and they do it so badly. This is a real tangent, but McDonald's are really pissing me off lately. I don't like the screens in all of the McDonald's, and they're really slow and unresponsive to the touch. I hate it when you push the button, you try and push the button 3 times, and then suddenly the screen catches up with what you're trying to do, and you've ended up with a fish fillet on the screen. And then you get... Anyway, enough about that. Technology in vehicles, nothing wrong with technology in vehicles, just make the technology good. I've seen footage of the original iPhone, and it's better than some of the touchscreens going into the latest cars. The most modern car touchscreens are not as nice as the original iPhone, and that is my concern with things like a phone key unlock for your car. And then also I worry when you lose your phone, you lose so much now. Now, I like having everything in my pocket, but I actually don't want my phone to do everything. So one of the things that we have on this house that I'm currently in is we have a keypad lock, and you just have to enter the passcode into the lock and you can get into the house. No phone required and no keys. And so that's what frustrates me. Why couldn't the Tesla have fingerprint unlock? That would make me happy. Then you don't need the phone. Sorry, wild tangent. Battery powered powertrain and manufacturing, energy storage developments increased 90% year on year Q3. That is incredible. So that was it in Q3 2022. It's actually the highest it's ever been. So this is not cyclical. They are increasing the energy storage, and that's cool because that is value. That is Tesla increasing value to consumers. So energy storage developments increased by 90% year on year in Q3, 4 gigawatt hours, our highest quarterly development ever. Continued growth in developments was driven by the ongoing ramp of our mega factory, cool name, in Lathrop, California, toward full capacity of 40 gigawatt hours. With the phase 2 expansion, production rate improved further sequentially in Q3. That's really cool. Solar developments declined on a sequential and year-on-year basis to 49 megawatts. Sustained high interest rates and end of net metering in California have created downward pressure on solar demand. Yeah, okay, fine. And then services and other businesses. As our global fleet size grows, our services and other businesses continue to grow successfully, with supercharged insurance and body shop and parts sales being the core drivers of our profit growth year on year. Pay-per-use supercharge remains a profitable business for the company. Blah, blah, blah. Boring. Volume. We are planning to grow production as quickly as possible in alignment with our 50% compound annual growth rate target. We began guiding to in early 2021. In some years, we may grow faster, and some we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of the long-term 50% compound annual growth rate, with around 1.8 million vehicles for the year. Okay, but you're sliding your revenues, brother. I shouldn't say brother. Doesn't sound right. That's the first time I've ever said that when I'm not talking about my actual brothers. Profit, while we continue to execute and innovate on innovations to reduce. Sorry, I was just wondering whether I was going to get cancelled for saying that. While we continue to execute on innovations to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Yeah, I mean, it is going to be incredible when Tesla does manage to release self-driving vehicles, and I am actually incredibly confident on that happening. But I do not think it's going to be as smooth as some of the more bullish people are predicting. Right, Cybertruck deliveries remain on track for later this year. That is cool. In addition, we continue to make progress on our next generation plan. I mean, I can't believe the Cybertruck is still like going to be happening soon thing. No doubt Elon Musk will deliver on it, but people have been waiting a long time for those. But that is a cool photo. Look at that. And I'm excited when I first see one of these on the road. Elon Musk is one of the few people that's creating products that I actually get excited to see. When I see a new Elon Musk product, I get excited, except for X, which, that's not particularly exciting, but to me. But when I see that incredible looking lorry on the road, that gets me really, really excited. And if I saw a lorry with 3 Cybertrucks on it, I think I'd at least, if it was parked, I'd stop and get out of my car, and I don't own a car, but I'd go and just look at it. I really, really want to test drive one of these. How long are we looking? 16 minutes, guys, until Elon Musk goes live, and we get to listen to him talk about these financials. So we have a quick look at how Tesla are doing after hours. So Tesla shares price. So very, very volatile after hours. Bleep, bloop, bloop. But to people saying that like it's significantly gone up, it hasn't. It's still down. But again, I'm not a big price guy. This is just people are understandably disappointed with where the share price is, with where the earnings are today. What does this do to their price to earnings? Because if I remember correctly, the price to earnings was 70, and I'd like to know where they are now. So we got earnings per share. Where were they there? EPS. Earnings. Got to have earnings per share, haven't they? EPS. Common stock, diluted, GAAP, and non-GAAP. Shouldn't be much difference between GAAP and non-GAAP, right? Earnings per share prior period results have been retroactively adjusted to reflect the 3-for-1 stock split effected in the form of a stocked dividend in August 2022. Okay, so there's a 3-for-1 stock split. You'd think they'd be divided by 3. Okay, so I think the ones that we are interested in, so this, by the way, is Q3 2022, and so it was 1.05. Let's go with the non-GAAP stuff. earnings per share 1.05, and then now we're looking at earnings per share. Whoop, let's go back to the top. 0.66. Yeah, that is down. But people were predicting 0.72 or 0 to 0.78. That was on Tom Nash's video. Was the general prediction was 0.72 to 0.78, and it's 0.66. So that is a 37% decline, which I think is pretty bad. I'm not like why am I laughing? Like, I'm upset. Like, I want Tesla to do well, but it does. It's an arrogant. I'm a dick. I've been saying that Tesla is overpriced from a value perspective, but then again, I don't think people. I'm not going to laugh anymore. When Tesla do badly, I'm never going to laugh again. Okay, I'm sorry. And it's totally understandable in these conditions for the earnings per share to be where they are. So what is the share price? So 242.68. So let's just put, where are we going to put it in? 242.68. That's a bit of an annoying place to have it, but let's just do that. And then equals sum, bleep blop, that. Let's see. Oh, goodness me. Guys, I ain't got this right, have I? Oh, it's quarterly. It's quarterly. It's quarterly. So do they just post the year on? Yes, they do. What we want is the earnings per share for the year. Earnings per share for the year? I've got to do so much adding up. Okay. Let's add this stuff up. 12 minutes, guys, into the call. What we're doing now currently is adding up the earnings per share for the last 4 years, just so that we can get an accurate representation. So insert 2 columns right. And so what we need is 1.05. Oh, it's not a percent. What are you doing? Okay. I want to know what the price to earnings ratio is going to be after today. So 1.05, 0.76, and 1.07, 0.76, 0.07, and 0.85. Zero 0.66, 0.91, 0.66, 0.91, 0.85, 1.19, 0.85, 1.19, 1.19. Cool, equals sum. Add those all up. No. And then do the same here. Yay! And we've got the earnings per share for the year leading up to this, which is more useful, actually. Why'd you just do that? So, what we want is that figure there, and we want to paste it. I know what's happening. And then what you want to do, paste values only. Copy that. Paste values only, and now I like to just delete information I don't need. Actually, just in case I end up needing it in this video, I don't want to be... What just happened? There it is. Okay. By the way, guys, I get a little bit nervous when I'm live streaming, so if you're sensing a little bit of like awkwardness, that's what it is, because I'm talking live to people and that scares me. let's get rid of all these boring numbers. Basically, that's incredible, isn't it? So that is genuinely the price to earnings added up for annually. The annual earnings barely changed in a year. In fact, it's just become a little bit less good. But really, you shouldn't be counting up tiny percentage points anyway. The general gist of what's happened is that Elon Musk is hard at work and still making things happen. The question is, are you as a shareholder going to get diluted more? I can't tell you. I think that's inevitable. Do I? Maybe. I don't know. It's very hard to say. I don't think a lot of the people holding this stock really necessarily care too much about the financials. They care about being part of a future, owning a portion of the driverless car network in the future and all of these things. But I do think there are a lot of people that think, oh, this stock's going to go absolutely to the moon. I think a lot of of the growth that Tesla could have had, it has already had. But anyway, I don't want to be talking negatively about a company that I like. So let's just check any questions from you guys. Thanks, Juan, for complimenting my video and audio. It's been a long time coming, trying to get that right. Okay, cool. Waiting 7 minutes now for the live stream. I am just going to switch to full screen for a minute. Actually, no, let's just leave that on and let's just wait these 7 minutes. I think I've said all I need to say about Tesla and their earnings. You can rewind back the video if you want to hear more of my thoughts about how they missed their earnings this year and what I think about that, and by how much. Basically, they did actually miss their earnings expectation by quite a lot, but actually from the year to date, they are more or less in the same position that they were a year ago. Other than that, I don't think there's much exciting stuff going on. You got Kathy Wood at ARK Invest saying exciting things about Tesla. She's had all these exciting conversations with Elon Musk, but she would say that she is a salesperson and she is trying to sell her fund. And then there's another guy, I can't remember, watching an interesting interview with him talking about full self-driving, another big investor. Basically, it's not until you see a product out in the real world where you really can judge it. Once MKBHD does an autofocus video on it, then I will know whether the product is real or not. Yeah. A bit unrelated, but I've got 7 minutes to, where are we at now? 6 minutes to chill and chat about stuff here. Bit unrelated, but I'm thinking about doing some videos on AI because I've been using it a lot lately. I've been using the Bing AI, the art tool, and just the regular Bing search AI. And I think it's fundamentally changing search engines. And so I think it's worth doing some videos on it and what that would mean for Microsoft, because you can actually value something that exists in the real world and that we're playing with. And so I think it's time that we rethink about Microsoft's growth expectation going forward the next 10 years compared to other companies. And also something like the Bing search is going to have incredible margins. So while the company is expensive, I'm absolutely shocked at how quickly Microsoft has integrated AI into all of its software. However, I've only been using the Bing search engine AI thing, and I use that, not ChatGPT now, because there's a really cool feature in the Bing one where if I ask it a question and then it gives me the answer, I also get the direct site links where Bing itself got the information. And so I have the references, which is really, really helpful. And it's been really helpful for me doing valuations and coding. It has massively sped up the speed at which I can pull data in from Yahoo Finance and stuff like that, because I'm able to talk to Bing and it's able to give me the code. ChatGPT could do it, and in some ways it does still do it better. I'm sort of switching between the two. Good for Microsoft, it owns both of them. And so I was a little bit hesitant on the sort of the AI boom and what it caused for market revenues, but I'm starting to think that we can now start pricing these in. Right, come on, Tesla, get to it. Only 3 minutes, 4 minutes to go. 4 minutes to go. I might have to grab another beer in a second, guys. The most thing that I'm anticipating most is I want real information on the self-driving car-ness. I want to hear, that's what I'm excited to hear about. Let me know what you're excited to hear about in the comment section. I wonder if Elon Musk gets nervous before these things now. Do you think he's just come straight from Twitter? Three minutes to go. Just to see, yeah, this is what I'm interested to hear about Cybertruck. Basically, Cybertruck is going to be rolling out in the next quarter, apparently. Always 1 quarter away, full self-driving. When is that going to be released? It would be fucking awesome if he does actually talk about when exactly. If he just says 2024, that means nothing to me. This is percentage, by the way, 25%, now 17%, 47% decline from the last quarter, from this quarter last year. But as we've worked out through the earnings per share, not much difference. Only a 3% decline across when you take all 4 quarters leading up to Q3. Just checking it out. Okay. The webcast is beginning. Right, I'm going to go get another beer, I think, before this begins. Yo. Got my beer. Okay. Okay. By the way, I'd be interested to know if you're watching this, are you a Tesla shareholder? And if you are, how long have you been holding Tesla shares for? And what price did you buy in? Their vidIQ score is 36.8. Wonder if there's anything in the description, any little hints. Oh, their video score is going way up. I'm guessing a lot of people are searching for this. Okay. Ooh. Okay. Is it going to begin? Waiting now. It's gone quiet. I don't know, is this normal? Elon, are you there? Hello? This wasn't me that raised volumes at full. Okay. Well, now, if you're just tuned in, there was music, and it's just been slowly, gently wound down. Tilly, what did you just eat? What did you just eat? There was no food there. Oh. All right. Do you want to get up on the bed? And people might be able to see you, Tedders. You can get up here if you want. You can get on the bed.
New factories.
Here we go. Hey, Elon, how you doing? You alright, Elon?
With FSD beta, full self-driving beta.
What's that? Sorry, I can't quite hear you. Oh.
A 10,000 GPU cluster of H100s. We think probably bring it into operation faster than anyone's ever brought that much compute per unit time into production, since training is the fundamental limiting factor on progress with full self-driving and vehicle autonomy. We're also seeing significant promise with FSD version 12. This is the end-to-end AI where it's photon count in, controls out. Or really, you can think of it as there's just a large bit stream coming in and the tiny bit stream
Scotty
going
McCleave's
out.
one share, nice.
Compressing reality into a very small set of outputs, which is actually kind of how humans work. The vast majority of human data input is optics from our eyes. And so we are, like the car, photons in, controls out.
I find that fascinating about AI as well, is the fact that when people talk about how AI works, it's remarkably similar to how humans actually compute information.
We will continue to invest significantly in AI development, as this is really the massive game changer. And I mean, success in this regard in the long term, I think, has the potential to make Tesla the most valuable company in the world by far.
Just having my dog on the bed.
If you have fully autonomous cars at scale and fully autonomous humanoid robots that are truly useful, it's not clear what the limit is.
Yeah, it would absolutely fundamentally change society.
We deployed 4 gigawatt hours of energy of storage products in Q3. And as this business grows, the energy division is becoming our highest margin business. Energy and service now contribute over $500 million to quarterly profit. The Cybertruck, I know a lot of people are excited about the Cybertruck. I am too. I've driven the car. It's an amazing product.
Where is it?
I do want to emphasize that there will be enormous challenges in reaching volume production with the Cybertruck, and then in making the Cybertruck cash flow positive.
Ooh.
This is simply normal for when you've got a product with a lot of new technology, or any new vehicle, brand new vehicle program, but especially one that is as different and advanced as the Cybertruck, you will have problems proportionate to how many new things you're trying to solve at scale. So I just want to emphasize that while I think this is potentially our best product ever, and I think it is our best product ever, it is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. Often people do not understand what is truly hard. That's why I say prototypes are easy, production is hard. People think it's the idea, or you make a prototype, you design a car, and it's not as though designing a car is just anyone can do it. It does require taste. It does require effort to design a prototype. But the difficulty of going from a prototype to volume production is like 10,000% harder to get to volume production than to make the prototype in the first place. And then it is even harder than that to reach positive cash flow. That is why there have not been new car startups that have been successful for 100 years, apart from Tesla.
That is incredible, isn't it?
I just want to temper expectations for Cybertruck. It's a great product, but financially, it will take, I don't know, a year to 18 months before it is a significant positive cash flow contributor. I wish there was some way for that to be different, but that's my best guess.
So 24 months.
So it really the demand is off the charts. We have over a million.
That's the thing, and that's the really hard thing to get. That's the hardest bit to get. Really, is demand.
It's not a demand issue, but we have to make it. And we need to make it at a price that people can afford.
Actually, no. Building the whole bloody car is the hardest thing.
In conclusion, we continue to focus on ramping production while maintaining positive cash flow, and we continue to expect to have around 1.8 million vehicle deliveries, as stated earlier this year. The Tesla AI team is, I think, one of the world's best, and I think it is actually by far the world's best when it comes to real-world AI.
So just want to pause that for a second. So that's the Cybertruck. Basically, the information on that is that it is going to take a long time to get these cars out. Elon Musk prediction 12 to 18 months, but yeah, typically he throws out these predictions. Notably, it's obviously going to be hard to make these predictions when you're actually on the factory floor and you're actually seeing all the errors occur, and then you have a supply chain issue, you can't get the materials that you need, all the different things that can go wrong. We're here looking at numbers on a spreadsheet when Elon Musk is looking at the real world, and so yeah, he's constantly under pressure to throw out these predictions, and you want to be optimistic because you want to motivate everyone, but at the end of the day, real world throws spanners in the works all the time. So it's interesting to have him say 12 to 18 months, but at the end of the day, he's dealing with the real world. It'll happen when it happens.
I'll say that again. Tesla has the best real world AI team on Earth, period. And it's getting better. And lastly, I wanted to thank all of our employees who are making a lot of extra effort during uncertain times. Thank you very much for your hard work and the impact that you're making.
And YouTubers that are promoting the
Thank you very much, Elon.
Tesla.
And our CFO, Vaibhav, had some opening remarks as well.
Thanks, Martin. The vehicle deliveries in Q3 outpaced production, and we had yet another record quarter of profitability in our energy business. Congratulations to the Tesla team for their continued focus on operational excellence.
Well done,
as
Tesla.
we navigate through a period of economic uncertainty, higher interest rates, and shifting consumer sentiment. As Elon mentioned, our Q3 operational and financial performance was impacted by planned downtimes for our factory upgrades.
Mm-hmm.
This was necessary to allow for further factory improvements and production rate increases. Despite such factory shutdowns, our cost per vehicle decreased to approximately $37,500. We saw sequential decreases in material costs and freight. Reducing the cost of our vehicles is our top priority. On the operating expenses front, R&D expenses continue to rise due to Cybertruck prototype builds and pilot production testing, combined with spend on AI technologies like full self-driving, Optimus, and Dojo. We have and will continue to make investments in these areas, and hence our capital expenditure and R&D will continue to grow in the near term. However, our focus is to continue making investments through positive cash flow from operations. This year itself, we have generated operating cash flows of approximately $8.9 billion and free cash flows of approximately $2.3 billion. Our other businesses are becoming more.
It's incredible that they managed to get to a free cash flow position so quickly, and it.
In megabyte deployments. Our services and other businesses on a year-on-year basis also continue to show positive momentum as we benefit from our growing fleet. As regards our pricing strategy, in addition to what we have shared before, I want to elaborate that most car buying happens with one or other form of financing, and hence we also view pricing in
that is the really big challenge for Tesla right now is financing is, and obviously is massively affected by rising interest rates.
To keep the monthly cost in parity. We've tried to offset such adjustments by our focus on reducing costs. However, there is an inherent lag in cost reductions, which in turn impacts margins. To that extent, we recently announced a partner vehicle leasing program in the US, whereby you can get a standard range Model Y for as low as $399 a month. In conclusion, as we navigate through a challenging economic environment, we're focused on reducing costs, maximizing delivery times.
Sounds ridiculously cheap to me. Americans who love debt and credit, I bet they'll gobble that up.
We believe this strategy positions us well for the long term. Once again, I would like to thank the Tesla team for their efforts in the last quarter.
Thank you very much. And now let's go to investor questions. The first investor question comes from Craig. How many Cybertruck deliveries do you anticipate for 2024?
It's difficult to make an accurate guess at this point. Going back to what I said earlier, the ramp is going to be extremely difficult. Like I said, there's no way around that. If you try to make, if we just try to do some copycat vehicle design, of which there are literally 200 models that are slight variations on a theme in the combustion engine world, just distinctions without a difference, then it's really not that hard. But if you want to do something radical and innovative and something really special like the Cybertruck, it is extremely difficult because there's nothing to copy. You have to invent not just the car, but the way to make the car. So the more uncharted the territory, the less predictable the outcome. Now, I can say that if you say, well, where will things end up? I think we'll end up with roughly 250,000 Cybertrucks a year. But I don't think we're going to reach that output rate next year. I think we'll probably reach it sometime in 2025. That's my best guess.
So the best possible outcome.
The second question is, can you provide a progress update on the...
So the best possible outcome is, what was that, 25 million vehicles per quarter next year? By 2025 or whatever. So what you want to do is you want to take that figure and you want to multiply it by 4 or whatever. You get the amount of Cybertrucks they can sell in a year. You can work out a rough estimate as to what those Cybertrucks are going to sell for, what the margin that Elon Musk is going to be getting on those vehicles, and then you can start adding that in to your price expectation of Tesla. And then you've got a best possible outcome from which to go off for a valuation point of view.
The 4680 cell, particularly progress towards performance improvements and cost savings outlined on Battery Day. Thank you.
Sure thing, Martin. 4680 cell production in Texas increased 40% quarter over quarter. Congrats to the Texas team for producing their 20 million cell off of line 1.
Well done, Texas team.
Texas is now our primary 4680 facility. We're heavily focused on quality. Scrap is down 40% quarter over quarter. With the increased volume and yield improvements, cell costs consistently improved month over month within the quarter, although we have a lot more work to do to achieve our steady state goals. And that is our priority. The Cybertruck cell with 10% higher energy than our Model Y cell started production on line 2 in
Cybertruck
Texas.
cell with
This quarter, we convert to building 100% Cybertruck cells to simplify and focus the factory as we ramp all 4 lines
that's cool.
in phase 1 over the next 3 quarters. Phase 2 of the Texas 4680 facility is currently under construction. The additional 4 lines incorporate further capital efficiencies over phase 1, and our target is for them to start producing in late 2024.
It's incalculable, but they've just, by changing they'll be doing the same battery for all their vehicles. That is great for margin, excellent for margin, but also they've just increased the value of the vehicle by 10%. If the battery is 10% more efficient, that vehicle's value has increased 10%. This is where I'm like, you've got to be value focused, not price focused, because price involves how humans will react to information and is very volatile, whereas value is very consistent. The vehicles has increased in value by 10% with that decision, but future vehicles, not vehicles today.
Lastly, in Cato, we're retooling to enable large-scale pallet runs of our next-generation cell designs. Cato's long-term goal is to be the launch pad for new cells, 1 generation ahead of our mass production facilities, enabling faster iteration and smoother ramp-ups of new designs.
Thank you. The next question from institutional investors: could you please provide an update on capacity expansion plans for companies' factories in Berlin and Austin, and the opening schedule of Gigafactory Mexico?
Berlin and Austin factory, the current priority is actually to maximize the output from our existing lines by laser focus on efficiency improvement. As always, maintaining a high quality and reducing per unit cost will be as critical as growing the production volume. For Mexico, we're working on infrastructure and factory design in parallel with the engineering development of the new production that will be manufactured there. That's all I can share for that.
In Mexico, we're laying the groundwork to begin construction and doing all the long lead items. But I think we want to just get a sense for what the global economy is like before we go full tilt on the Mexico factory. I'm worried about the high interest rate environment that we're in. I just can't emphasize this enough that for the vast majority of people, buying a car is about the monthly payment. And as interest rates rise, the proportion of that monthly payment that's interest increases naturally. So
it's funny how little often that gets left out.
Or even higher, it's that much harder for people to buy the car. They simply cannot afford it. And we're not tracking, I believe, at this point for Model Y to be the best-selling car on Earth, but not just in revenue, but in unit volume. If you compare that to the other vehicles that are, number 2 and number 3 and whatnot, they cost much less than our car. We're just hitting law of large numbers situations here. I know people want us to advertise, and we are advertising. I think there is something to be gained on the advertising front. I don't think it's nothing. But informing people of a car that is going that they cannot afford does really help.
I completely agree on this. Advertising, it's absolute bullshit. Everyone knows Teslas exist, and people will go out and look for the price of a Tesla. You don't need to advertise it. The fact is, people have less cash, and advertising to people that do not have the cash to buy a Tesla is just not a sensible thing to do. It's the fastest way to lose your money. Teslas, I found that quite funny.
So
definitely agree with that.
The thing that must be solved is to make the car affordable, or the average person can't apply it for any amount of money. They simply can't afford it. They can't afford it. So this is big deal.
So it's very sensible. It's what he's saying is very rational. The fact is that interest payments have gone up. Most people buy cars, new cars with finance, and so the monthly payment has been affected on Teslas. What he's saying is that the Mexico factory that they are building, and this is really common. I just bought some shares in some coal companies, and they had to slow down production at one point when basically the price of coal went down. When your income lowers, what you got to do is you got to slow down production. You have less men on site, you have less other things going on, and so you sorry, Scotty just mentioned that I love don't worry. Basically they're just slowing down production so that they can afford it for long term. They'll continue doing the production, but they'll be having less people on site, which will mean that it goes slower. If interest rates start to go lower, then they'll know that people will be buying more cars and they can go full tilt into the Mexico factory production.
Okay, thank you very much. The next question is, when do you expect Model 3 Highland to be available in the US? I just wanted to address that, unfortunately, we don't answer product-related questions and timings on earnings calls, so let's go to the next one. Current sell-side consensus assumes that Tesla will deliver 2.3 million vehicles in 2024, representing 28% growth versus 2023 guidance. Is this growth rate achievable without any mass market launches in 2024? And when does Tesla expect to return to its 50% long-term CAGR?
Thanks for the question. When we look at 2024, there are a lot of moving pieces. Elon just talked about what is happening in the macroeconomic environment. So we're focused on growing our volumes in a very cost-efficient manner and are carefully reviewing all our options, and we'll be able to provide a much more meaningful update at our next earnings call.
Yeah, I mean, the risk of stating the obvious, it's not possible to have a compound growth rate of 50% forever, or you will exceed the mass of the known universe. But I think we will grow very rapidly, much faster than any other car company on Earth by far.
So confident.
Next question is, do you have an approximate timeline in mind for the robotaxi, driven or non-driven? What excites you most about how this project is progressing?
You can't have a driven robotaxi.
Well, robotaxi is like necessarily non-driven.
Yes.
I guess I am very excited about our progress with autonomy. The end-to-end, nothing but nets, self-driving software is amazing. I drives me all around Austin with no interventions. So, it's clearly the right move. So it's really pretty amazing.
He's so hesitant to say when it will come out.
That same
So it's not this quarter.
software and approach will enable Optimus to,
unless they have planned some sort of big
enable Optimus
reveal.
to learn how to do things simply by looking. So, extremely exciting in the long term. As I mentioned before, given that economic output is number of people times productivity, if you no longer have a constraint on people, effectively you've got a humanoid robot that can do as much as you'd like. Your economy is quasi infinite, or infinite for all intents and purposes. So I don't think anyone's going to do it better than Tesla, not by a long shot. The bus dynamics is impressive, but their robot lacks a brain. Sort of like the Wizard of Oz or whatever. Yeah.
So buy the Wizard of Oz.
And then you also need to be able to design the humanoid robot in such a way that it can be mass manufactured. And then at some point, the robots will manufacture the robots. Now, we need to make sure that there's a good place for humans in that future, and we do not create some variant of the Terminator outcome. So we're going to put a lot of effort into localized control of the humanoid robot. So basically anyone will be able to shut it off locally, and you can't change that, even if you.
I'm actually scared that we are creating robot slaves.
It has to be hard-coded.
Thank you. The next question is, why was the price dropped on FSD if it is getting better and robotaxi is expected so soon?
Well, we just wanted to make it more affordable, so more people could try it. I think over time the price of FSD will increase proportionate to its value. So I would regard the current price as a kind of a temporary low.
Thank you. The next question is again on FSD. Mercedes is accepting legal liability for when its level 3 autonomous driving system Drive Pilot is active. Is Tesla planning to accept legal liability for FSD? And if so, when?
That's a really interesting question.
Let's assume we have legal liability, judging by the lawsuits. We're certainly not being let off the hook on that front, whether would like to or wouldn't like to. So,
I mean, I think it's important to remember for everyone that Mercedes' system is limited to a few roads in Nevada and some certain cities in California. It doesn't work in the snow or the fog. It must have a lead car, marked lanes, only 40 miles per hour. Our system is meant to be holistic and drive in any conditions, so we obviously have a much more capable approach, but with those kind of limitations, it's really not very useful.
I think some people understand the profundity of the Tesla AI system. Most people, but very, very few. It's basically baby AGI. It has to understand reality in order to drive.
Baby AGI. Okay.
Thank you.
Well, the next question is, what is baby AGI?
Will Optimus be working on Gigafactory lines?
So basically,
year?
Tesla are liable.
How many would you guess
if you're in a crash
will be deployed?
I think at this point I'm not ready to discuss details of the Optimus program, but we will provide periodic updates online.
Would you have a Tesla robot in your house?
As you can see, where Optimus a year ago could barely walk, and now it can do yoga.
Tesla girlfriends will cost less than your actual girlfriend.
A few years from now, it can probably do ballet.
Sounds good. And the last question from investors is, neural net path planning represents a significant advance in capability and safety for FSD. What steps is Tesla taking to make this technology available outside the US?
Yeah, our approach has been to try to get it, the more places we try to make it work, the harder the problem is. So the reason we don't do it in all countries simultaneously is that it would take much longer to make it work anywhere at all. That's why it's currently just North America. And also for most parts of the world, you have to get approval before deploying things, whereas in the US, you can deploy things at risk, or at least you take liability for what you deploy. So it's whereas most countries require some sort of extensive approval program. So
interesting.
We only want to go through that extensive approval program when we think it's kind of ready for prime time in that country. I apologize that it's not in those countries, but we keep finding ways to make it better, and it needs to drive. It needs to drive such that it exceeds the
even unsupervised significantly exceeds the probability of injury of a human. It's significantly better, a lower probability of injury than a human by far. I think we're tracking to that point very quickly.
I don't think it will be that hard because humans make so many errors.
The reason I've been overly optimistic is that the progress tends to sort of look like a log curve, which is that you have kind of rapid initial improvements, and that if you were to extrapolate that sort of rapid, fairly linear rate of improvement, you get to self-driving quite quickly, but then the rate of improvement curves over logarithmically and starts to asymptote. That's now happened several times. I would characterize our progress in real-world AI as a series of stacked log curves.
Basically saying exponential improvement.
AI, like LLMs and whatnot. Series of stacked log curves. Each log curve gets higher than the last one. So if you keep stacking logs, eventually.
Basically, the improvement of the AI looks like Tesla's share price.
Analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great. Thanks so much for taking my question, and thanks for all the updates today. We learned earlier in the call, it sounds like you don't think the truck will ramp to significant volume until its third year of production. Should we have a similar anticipation for the ramp of the next-gen platform, or is there any reason that we should be maybe more optimistic or pessimistic about the ramp profile there? Thank you.
Yeah, I mean, to be clear, it's not really the third year of production. It's kind of like the 18th month of production is roughly my guess. So it's just that it'll happen.
That's a year and a half.
It starts this year, spans next year, and gets to 2025. So technically there are 3 calendar years in there, but there's actually only 18 months, not 3 years. I would be very disappointed if it took us, and that would be shocking if it took us 3 years. But 18 months from initial deliveries to reach volume and reach prosperity with an immense, I can't tell you how much blood, sweat, and tears.
The media headlines will be 3 years till Cybertruck.
Right. I've been through it many times. And then here we go again.
Similar path for the next-gen platform?
I mean, there's like unique complexity to Cybertruck.
Yeah. I mean, Cybertruck is. Yeah. I mean, we dug our own grave with Cybertruck. Nobody. In general, I find nobody digs their grave better than themselves, and so, it is. Cybertruck's one of those.
It's a very unique design
product that comes along only once in a long while. And special products that come along once in a long while are just incredibly difficult to bring to market, to reach volume, to be prosperous. It's fundamental to the nature of the newness. So now the sort of high volume, low cost, smaller vehicle is actually much more conventional. In terms of like the technologies we're putting into it, we didn't have to invent how to bend full hard stainless steel or have mega 9,000-ton casting or the largest hot stamping in the world or new.
Writing down notes. Oh, they seem to have lost connection. Sound is on. It's not paused.
As long as you're saying we're doing everything possible to simplify that vehicle in order to achieve a
units per minute level that is unheard of in the auto industry.
Yeah, I mean, simplification makes it easier to automate. It also makes it lower cost. Yeah, it's intrinsically lower cost.
Yeah. Let's be clear, it'll be cool, but it's utilitarian. It's not meant to be fill you with, awe and magic. It's can get you from A to B. And it'll be still beautiful, but it's utilitarian. It's a utility.
Doesn't have 14 inches of travel on its suspension.
Yeah, as an example. Yeah. So, the Cybertruck has a lot of bells and whistles.
I want to see what those
Much.
bells and whistles are on
Let's
an
go to
MKBHD video.
From New Street Research.
New Street Research.
Hey, can you hear me fine? Yes. I have first a follow-up question on FSD.
Full self-driving.
And pricing and adoption. So I agree with you that as FSD improves, we should see its value increasing. But I guess the ultimate value of FSD, which is to be able to handle a robo-taxi, is not going to necessarily interest everybody, and you have a bit of a degraded version that would be like a chauffeur service where the car drives by itself, but you still have to be in the car and around, and then there is the hands-on, eyes-on version of the service. And I guess, there should be much lower cost, lower feature kind of variants of the service that could have a very large penetration on your install base and more expensive one that would remain at a lower penetration level. So I'm just wondering if you're taking that. And last but not least, the simplest version of FSD are available and are going to work from a technical perspective probably before the ultimate robotaxi version can work, if ever. And so I'm wondering how you take that into account in how you're thinking the financial contribution of FSD over time, and whether you could evolve your pricing along that kind of tiers to increase adoption.
Oh God, it drives me nuts when questions are about 2 minutes long.
Yeah, I mean, a fully autonomous vehicle, I think here sort of the economics of a fully autonomous vehicle are truly astounding in a positive way. When you look at passenger vehicles today, they only get about 10 to 12 hours of usage per week. That's, if you drive an hour and a half a day on average, that's roughly 10 hours a week out of 168 hours. And then there's also, you got to have parking and insurance. You got to take care of the car. It's there's a lot of overhead. So, I mean, yeah.
Yeah, I mean, just getting rid of parking would be fantastic. Economically.
The economics of the system are just insanely positive. Given that the car, all of the cars we're making and have made for a while, we believe are capable of full autonomy. So then if you're able to, say, increase the utility of that car by a factor of 5, which still only means that it's being used for maybe 50 hours a week out of 168. So you're still assuming that still assumes less than a third of the hours of the week is doing something useful. You've increased the value of that by 5, but it still costs the same. You have something, then we're a hardware company with software margins.
Peter, do you have a follow-up? Yes, I'll have actually a follow-up on a different topic for you, if that's okay. It's about your gross margin in the quarter. Could you give us a sense of in how the gross margin evolved sequentially? How much was the impact of idle costs? How much was the sequential benefit, I imagine, of production ramping at Berlin and Austin? And then I saw like this massive jump in energy storage, very strong positive surprise. So if you can give us the background on that and tell us, how we should think about that gross margin going forward.
Okay, thanks for that question. So in terms of, you have a few different aspects of your question. So if I just look at from Q3 perspective, obviously factory idle time had an impact. It did impact by, I won't give you the exact percentage, but it had decent impact for the quarter. And, when you look at the other pieces which we're trying to do, we did see certain of our other factories ramping up pretty well, right? And they actually contributed pretty well to the margin for this quarter. In fact, one of the factories came pretty close to, in terms of per unit costs, to where we are for one of our other established factory, which is Fremont. So that was a positive in the quarter. When it comes to energy margins, Megapack deployment was the key driver there, and that product has done well. On the cost curve also, we've been able to do a lot there. But I do want to caution that, Megapack deployments are a bit lumpy. So yes, we had a great quarter this period, but depending upon where we are trying to deploy that product in different markets, you would see periods wherein there would be downward pressure on deployment because of us trying to get the product to that place where
product in transit. Yeah.
Yes.
Yeah.
Okay, thank you very much. Let's go to Rod Lash from Wolf Research. Rod, feel free to unmute yourself.
Thanks. Really nice to see the rate of vehicle cost improvement despite the downtime that you took. You've taken now about $2,000 out of the average vehicle cost over the past year. Can you give us maybe a sense of the rate of improvement that you see from the changes that you alluded to, the factory changes you alluded to? Is there a way maybe to convey the speed of improvement on your existing product from here? And then related to that, can you share the timing of your next gen, the lower priced product that you talked about earlier this year?
Yeah, so just in terms of product margins, there are lots of puts and takes when you look into this. There are certain things which we control, and there are certain things which we don't control. We expect that we'll get some benefits from our cost reduction efforts, which are all underway. But on the other hand, we just finished our factory upgrades late in Q3. Some of these factories are still in the early ramp phase in Q4. We're still not up to where we want those factories to be, so they'll impact in the near term. Plus, like Elon mentioned, we're going to be ramping Cybertruck, which is going to be another headwind which we will be dealing with. On top of all that, there's overall uncertainty in the macroeconomic environment, which even makes it harder to predict precisely as to where we land. But yes, this is something which, it's an evolving thing which we're observing every day and reacting to it on a daily basis.
I would just say that on the cost reduction efforts, like we are unflagging in our pursuit of additional cost downs for 2024. We do have a good pipeline of them and work on both the engineering side and the factory operations side. And our intention is to maintain or exceed the trend that you saw. We're trying as hard as we possibly can.
The timing of the next gen product, can you share that?
Not at this time.
Okay, and just as a follow-up, obviously price is also a driver of demand, but that's obviously not happening in a vacuum. And you mentioned that, I think you mentioned it at some point during this call that you're also maybe hitting the law of large numbers on some of your products. Can you just share how you're thinking about price elasticity just at this point and in this macro environment? And any thoughts along those lines?
I think that there's very significant price elasticity. I mean, to be totally frank, if our car costs the same as a RAV4, nobody would buy a RAV4. Or at least they're very unlikely to. It's worth noting that a lot of these incentives, like the tax credit and whatnot, they're actually very difficult for the average person to access because most people do not have 10 grand, or even $7,500 burning a hole in their bank account. Large number of people are living paycheck to paycheck, and with a lot of debt. They've got credit card debt, mortgage debt. So yeah, that's reality for most people. It's sometimes difficult for people who are high income earners. And I'd say high would be like someone who's earning over $200,000 a year, to understand what life is like for someone who is earning $50,000 or $60,000 or $70,000 a year, which is most people.
That's not me.
So that, like, for a lot of people, like these tax credits just they can't front $7,500 for 18 months or even 6 months to get for the tax credit, and they actually don't. It's okay to even have that. Then I'm $7,500 in taxes. So
yeah, the tax credit thing is ridiculous.
So it's really just the vast majority of people is how much money do they have to pay immediately and how much per month. That's it. And you can stop right there.
That's everyone, really.
And that car is still much more expensive than a RAV4 when you look at it that way.
Right, just going to the toilet quickly.
When we look at car buying in general, we're trying to get to the next set of EV adapters. And they
Well, not an EV adapter, just
next.
Who wants a great car?
Exactly.
It's not a, sometimes you get these honestly, I'd say it's like somewhat correlates with the why doesn't everyone work from home crowd. I'm like, I mean, this is like some real Marie Antoinette vibes from people that say, why does everyone work from home? Like, what about all the people that have to come to the factory and fill the cars? What about all the people that have to go to the restaurant and make your food and deliver your food? It's like, what are you talking about? I mean, how detached from reality does the work from home crowd have to be? While they take advantage of all those who cannot work from home. So, I mean, you have to say, like, why did I sleep in the factory so many times? Because it mattered. So I just can't emphasize how important cost is. It's not an optional thing for most people. It is a necessary thing. We have to make our cars more affordable so people can buy it. And I keep harping on this interest thing, but I mean, it just raises the cost of the car. I mean, we're looking at an internal analysis, which we think is more or less on track. That when you look at the cost or the price reductions we've made in, say, the Model Y, and you compare that to how much people's monthly payment has risen due to interest rates.
Yeah.
The price of the Model Y is almost unchanged.
If we factor in the change in interest rates.
Yes, which is that's what I'm trying to say. The thing that matters is the monthly pay. It's
yeah.
How much money do they have to put down, and do they?
That happens at Washington.
And then
private companies, capitalism gets way too much of the blame for the shit that comes from government.
Has to not cause their bank account to go negative. That's it. So, going from near zero.
Scott, news would look negative after negative earnings.
Very high interest rates. The actual monthly payment is basically the same. It's just a bunch.
That's crazy. So that after all this interest rates, and interest rates have risen enormously, you're paying almost the same amount for a Model Y monthly because they've reduced the cost so much.
The number of people who simply cannot get credit, period. Even if they've got a job and everything's consolidate. You know, the banks are, you know, a little gun shy on handing out credit, given that a bunch of them kicked the bucket earlier this year.
Yeah, there's also just fewer options, even if they hand out.
And then they get bailed out again.
Fewer
Silicon
banks
Valley
don't
Bank
exist.
bailed out
Fewer
400
banks
billion.
don't exist. Well, the bank does not exist. You have to establish a relationship with a new bank, you know, so a lot of regional banks are, you know, died, and I mean, even Credit Suisse. I mean, geez, that was a shocker. Like a 160-year-old-ish Swiss institution that doesn't exist anymore. That's mind-blowing. And I think there's still quite a few shoes to drop on the bad credit situation. Commercial real estate obviously is in terrible shape.
Yeah, that's a whole video actually.
Credit card debt has been rising significantly. The credit card interest rates are usurious. Over 20% interest rates, meaning like, which over time is just, it becomes obviously extremely punishing. Because if somebody's paying 20% interest on their credit cards, it means they cannot pay them off. And if you cannot pay them off and you're still accruing interest at 20%, that's headed to a bad place.
Same as student loan.
Thank you. Let's go to the next question from George from Canaccord.
Thank you for taking my question. Just to focus on the cost per vehicle, you know, coming down in future quarters, as you discussed in your written remarks. I'm curious as to what the levers of that could be. Is it more scale, more factory utilization? Is it material cost reductions? Is it things like gigacasting? I mean, can you just kind of give us some data points to give us confidence that that's going to come down over time? And if I can sneak one in, please. There are press reports, and I know how perilous it is to believe some of these, but they say that you've included radar as an option in some Model Ys in China, and I'm just here to ask if that's true, and if so, why? Thank you.
We've not included radar. We have radar as a Tesla designed radar as an experiment in the Model S and X. That's it. We'll see whether that experiment is worth it. But there are no plans to integrate radar into 3 and Y. Just as humans drive well, and in fact, an excellent human driver can drive with amazing safety simply with their eyes. The car will far exceed average human safety just with vision, far. Because I mean, the car is looking at all directions at once. So we don't have eyes in the back of our head. So.
And it looks with the same level of concentration all the time. Yeah.
So radar is, you know, what really matters is how much does it affect the probability of an accident. And in order for the radar to be effective, you have to be able to do radar-only braking. You have to do actions that are radar only. Otherwise, you get this disambiguation problem between vision and radar. That's why we actually turned off the radar in cars historically that we had. All 3 and Y used to have radar, but we turned it off because the radar actually generated more noise than signal.
Interesting.
Now, the Tesla designed radar is a high-resolution radar that has some potential to be useful, but the jury is still very much out on whether that is in fact the case.
That's the first time I've seen an argument against radar. I thought it was cost, but Elon is saying that it actually makes it more complicated to design the AI.
We are always trying to engineer our products to be cheaper to make and more efficient to make. That comes obviously on the engineering side as we come up with new innovations, but as well on the supply chain side with our partners. We work with them to automate some of their lines, remove their bottlenecks and their high costs as well. On the logistics side, getting parts to the factory. It's not like a one thing that you have to attack cost everywhere, and we do it ruthlessly at all times.
Operations efficiency. all of the above?
Yeah, I mean, I would say there's a whole longer list of things which we are chasing. We internally call it the cost attack, where we're literally going line by line and saying, how can we make it better? And it's a grind.
The grind.
It's a game.
Game of pennies. It's like Game of Thrones, but pennies. First approximation, if you've got a $40,000 car, and roughly 10,000 items in that car, that means each thing on average costs $4. So in order to get the cost down, say by 10%, you have to get 40 cents out of each part on average. It is a game of pennies. We play it willingly.
We play it.
Yeah,
Religiously.
we've done it many times. Even something as simple as like a sticker. Like there's too many stickers internally in the car that nobody ever sees. There's something as simple as a QR code. You might think, well, putting a QR code on part, why not just put them on there? It's like, well, are we actually going to use that QR code?
Costs a penny.
Yeah, exactly. And then inevitably, sometimes the QR code doesn't go on properly, or you can't read it properly, and it stops the line.
Costs more than a penny.
Yeah, absolutely.
So
It's chipping away with it. I mean, it is trying to. It does feel like digging a tunnel with a spoon at times. Very much a spoon. Yeah.
On top of it, like we said, we did some factory upgrades, so we expect volume to go up. That would also bring some savings from higher production. But then on the flip side, we're going to be ramping a new product like Cybertruck, which we talked about. So, yeah, so those are the puts and takes which we are working through.
Yeah, but there's not like some accidentally, some brick of gold that we shot in the car, unfortunately. And it's, we're trying to be very rigorous about improving the quality and capability of the car, because it's like any fool can reduce the cost of a car by making it worse, deleting functionality and capability, and that's how cool this sort of the any fool. It's like if you want to lose weight and you say, well, I need to lose whatever 15 pounds right away. Well, you can chop your arm off, but then you're sitting there with one arm. You're still fat. It's sort of like, I gotta work at it. Yeah, you actually have to eat less food and work out. That's the actual way. And doctors advice. Yeah, it's super fun because food is delicious, and I personally am not I don't love working out. I know some people do. I wish I did, but I don't. Unless moving the mouse consists of working out, in which case I love moving the mouse.
All right, let's go to Colin Langham from Wells Fargo.
Wells Fargo. I was thinking about investing in them. Charlie Munger owned stock.
Can you unmute yourself?
Not a good sign.
Oh, great. Thanks for my question. You said in the commentary that you're not going full tilt on the plant in Mexico until there's signs that the economy is strong. Can you continue at a 50% CAGR without that plant? And where would that come from? And any color on what you mean sort of not going full tilt? Could that plant get delayed indefinitely? Or what are you kind of talking about?
No, we're definitely making the factory in Mexico. We feel very good about that. We put a lot of effort into looking at different locations, and we feel very good about that location. And we are going to build a factory there, and it's going to be great. The question is really just one of timing, and there's going to be a broken record on the interest front. It's just the interest rates have to come down. If interest rates keep rising, you just fundamentally reduce affordability. It is just the same as increasing the price of the car. So I just don't have visibility into. If you can tell me what the interest rates are, I can tell you when we should build the factory. We're going to build it. I think we'll start the initial phases of construction next year. But I am still somewhat scarred by 2009 when General Motors and Chrysler went bankrupt. So, well, that's now 14 years ago. That is seared into my mind with a branding iron. Because Tesla was just hanging on by a thread during that entire time, and with them, when we closed off a financing round in 2008 at 6 p.m. December 24th, Christmas Eve, and if we had not closed that financing round, we would have bounced payroll 2 days after Christmas. So we actually closed that round on the last hour of the last day that it was possible. Stressful, to say the least. And then barely made it through 2009. So I'm like, I want to I don't want to be going at top speed into uncertainty.
Wow.
A lot of wars going on in the world, obviously, as well. And we have room here, like in Giga, Texas. You said we still have room in this building. It's not full with Cybertruck and Model Y, and there's plenty of growth opportunities still to have inside the building where our team already is. We also have 2,000 acres here. There's also a bunch more. We're actually only occupying a tiny corner of the land that we have. But we could technically do all the scaling necessary just here.
It's a bleak outlook.
Personnel is our biggest challenge in that the greater Austin area only has, generously, the greater Austin area only has 2 million people. So people are moving here, and they're willing to move here, but there is somewhat of a housing crisis. They got to live somewhere. So I don't know. I'm just curious. I'm not saying things will be bad. I'm just saying they might be, and I think Tesla is an incredibly capable ship, but it is. But if we need to make sure, if the macroeconomic conditions are stormy, even if the best ship is still going to have tough times. The weaker ships will sink. We're not going to sink, but even a great ship in a storm has challenges. That storm will apply to everyone, not just us, and not just the auto industry. It apply to everyone, I think. Apart from necessary sort of staples like food and stuff, but so I don't know. If interest rates start coming down, we will accelerate.
All right.
If anybody's got any guesses on this, I'd love to be less wrong. And I apologize if I'm perhaps more paranoid than I should be, because that might also be the case, because I have PTSD from 2009, big time. And in 2017 through 19 were no picnic either. That was very tough going. So, the auto industry is also somewhat cyclic, because people tend to hesitate to buy a new car if there's uncertainty in the economy. So it's car companies do very well in good economic times, and they don't do as well in tough economic times. So it's just whereas if somebody's selling bread, then I think that people still need to have bread. Yeah. Yeah, you need bread. You need food all the time, but new car you don't have to have bread.
Especially if there's wars going on, and then that impacts your sentiment.
Yeah. If people are reading about wars all over the world, buying a new car tends to not be front of mind.
All right. Unfortunately, that's all the time we have today. Thank you very much for all of your good questions, and we'll see you again in 3 months. Thank you very much.
Cool. Guys, that's the end of the video. I'm really tired, so I'm just going to run through some of the points. Basically, with AI driving and stuff like that, it only needs to be better than human drivers, and Elon Musk wants to be significantly better than human drivers. I think the main thing is when you think about when human drivers most commonly make mistakes. So, for instance, drink driving is one of the biggest issues. Cars will never drink drive, and crashes probably occur more when people are tired or when roads are slippery. So long as the AI can identify that the road is slippery and stuff like that and account for it, then a lot of human error will be eliminated. So you've got to think about when humans are most likely to commit accidents. AIs particularly excel. And so, the fact is, so long as AI is better than human drivers, I definitely see them taking off. Also, I know a lot of women that are afraid of going home at night. They wouldn't like to walk home. A driverless taxi surely feels safer than getting in a taxi with a stranger driving. Even though I prefer Uber to, say, London cabbies, because you can actually see a 5-star rating on them and stuff like that. So definitely see AI as safer and more convenient and cheaper and better than human drivers. Full self-driving. Elon Musk talks about having the best team in the world. Well, Apple won't be bragging about their team. But if the rumors are true that Apple is producing a car, which I really, really hope is true, because I believe that Tesla does need more competition from tech companies. I heard Apple are really going hard on their Apple Maps, and that Apple Maps does seem to be better than it was a decade ago. And one of the reasons I thought maybe that they're doing this is potentially they're going to be sending cars out into the world to document in the same way Google has. For Google Maps, sending cars out with modern cameras, making a better, more advanced map of the world. But what they can do simultaneously is then import that information into their network so their driverless car can be the best in the world. And they've hired some really exciting people. The chief CFO or whatever at Lamborghini for electric Lamborghinis. It works for Apple. So I definitely think Tesla will have competition, and Apple will probably do their thing of producing a car or producing a product that is far ahead than anyone ever expected them to do. I still remember when Google talked about the iPhone coming out, they knew they were going to be releasing an iPhone. They did not realize it was going to be that good. And then comment from Scotty Mully Cleaves. Scott, news looks very negative from missing expectations. Yeah, they missed expectations. That's negative, so the news will be negative. Don't pay attention to the news. They're just trying to get you to click on them, and so basically it's a competition to who can produce the most negative news article at this point. As soon as I knew that the earnings were negative, I created a more negative thumbnail for my YouTube video. Anyway, so it is what it is. That's just how the world works. Human beings, they'll gravitate towards the post that stands out the most, and it's not always the most negative thing, but that is generally one of the easier ways to get to stand out. Robots replacing. I was wondering whether maybe one of the reasons Elon Musk wants to create humanoid robots is to replace them in places like Africa, where Elon Musk and electric cars, rightly so, get a lot of negative press for basically paying tiny amounts for people to work in horrible conditions. And so whether it will be good for them to have their jobs replaced, I don't. God knows. You've often learned that actually they are happier to have these jobs than no job at all. But yeah, the conditions do not look good, and it would definitely, we'd sleep easier knowing that there are robots doing that rather than people. And I just found it funny that, when you think about the fact that you got a £10,000 car, so you got 10,000 components in a car, each of those components costing $4 each, and just I'd love to just be part of trying to work out how to shave pennies off each individual component. It seems funny to me thinking of the amount of money that each of these people make, and like, yeah, them trying to work out how to save a penny. Right, those are all my notes that I wanted to talk about at the end of this. I'm enjoyed listening to the whole thing. Thank you so much for those of you that joined me, and yeah, have a good evening.